Happy Friday, everybody. I hope you had a great week and are getting ready for a fun, relaxing weekend ahead. So let's take a look at Bitcoin and the cryptocurrency markets and see what we can expect for the weekend. All eyes have been on Bitcoin lately as it crosses 50,000 and got up to 56,000 for a high. So we were reaching some pretty critical levels. One thing to keep an eye on is if you've been watching this space and a lot of the analysts out there is that your big levels to keep an eye on from a retracement standpoint is that Fibonacci 702 retracement, which is right about where Bitcoin is getting rejected, that between that 702 and 786 Fibonacci level is typically where, if Bitcoin is going to reverse and turn around, that's where it's going to happen. So keep an eye on those levels as we go throughout the week and the weekend. Let me bring that up so you can see right here. We did pop above the 702, got a little bit of a rejection, pop back up again. Now we're kind of bouncing around that frame. All of the institutional investors, market makers know that that's a critical level for Bitcoin and cryptocurrencies and for the market in general. Everybody is watching that. So one thing that's really interesting here, the way the market had been setting up, and as we go into the weekend, it was generally pumping into the weekends and then selling off over the weekend and into Monday, Tuesday. So you could enter your positions on a Monday, ride that up, get out of that. You could enter or build your positions on a Tuesday. I mean, not a Monday, but a Tuesday morning, Tuesday afternoon, depending on where you're at. I am Eastern Standard Time. So when I'm talking about time frames, from my standpoint, it's Eastern Standard Time. So Tuesday morning, Tuesday afternoon is where I would either enter or build a position. Well, I don't do long or short. So I would enter my positions there. And then I would look to get out Thursday afternoon, Friday morning before markets opened on Fridays, and then just kind of let it ride over the weekend. So that worked really well for the last few weeks until last weekend. Last weekend, things changed. The markets did pump going into the weekend, and then they sold off a little bit. But then it pumped again over the weekend, especially Bitcoin, where we had those big pumps. As you can see, today is October the 8th. And if we look back at last weekend, we'll see what the what dates we're looking at here. And basically, so the first was right, there's the 30th, here's the first. So we had a little pump on the 30th and the first. The 30th was a Saturday. Or I'm sorry, yeah, the 30th was a Thursday. So we pumped Thursday into Friday. Friday was the first, which, you kind of expect that, as I said, pump going into the weekend. And then typically you have a little sell-off, but this time we pumped throughout the weekend on Saturday, Sunday, and then of course Monday. The rest of the week, Monday, Tuesday, Wednesday, we've been up, and we've been seeing these big moves in Bitcoin. So the thing that's really interesting here is that, as you know, as Bitcoin goes, as goes the market. Typically, you'll see Bitcoin run, then Ethereum, then your large caps will run after that. There's a lot of different players in the game now and in the space, and there's a lot of different avenues to invest in now with NFTs, gaming, DeFi, all of these different things that were not around in previous cycles. So it'll be interesting to see how that plays out. Capital is getting split up in a lot of different areas now versus just primarily being focused on Bitcoin, large cap alts, small caps, and then all the meme coins. And as you've seen, Shiba has been on a run lately, and a couple of coins here and there. Here's Shiba on the daily, just crazy charts. And we'll go back and look on the hourlies as well. With Bitcoin. But what's really interesting is this price action. So on Bitcoin specifically, you can see that this whole move here, this little move, this little micro move within the cycle is kind of mimicking this big move here in the macro cycle here recently between that January, February, through the spring, May sell-off down into July and then the bounce. This kind of looks a lot like where we came from over here, all of this price action. So the question is, where are we right now? So this bounce and drop here looks like this drop and bounce into the consolidation kind of down in this area. Then we pumped up like we, pumped up here. It looks like we pumped up here. So the question is, where are we right now in this area? Are we at this first little consolidation, second little consolidation right here before another little drop to the downside? Or are we just beginning where we've gone through this consolidation phase and we've got our spring coming up? And we're just hitting this first little hiccup here before we have further continuation to the upside. So I think on-chain analytics, fundamentals, and a lot of the people will tell you that we're probably at the beginning of the all-time high run. But we just won't know and don't know until we get there. One thing to think about is, the markets are going to do whatever is most convenient. This is a very tricky time right now as Bitcoin gets back to these Fibonacci levels. These are very critical levels we got to break through. And as we get, closer to this previous all-time high, you just have to be careful because a lot of the miners are moving coins onto exchanges. Some of the whales are moving coins onto the exchanges, and a lot of retail traders that got trapped in here are taking, getting out of their position or taking profits right now. And a lot of people that bought down here are selling right now and taking profits instead of waiting and taking the risk of reaching that all-time high. So there's going to be a lot of resistance. What is resistance? Selling. What is support? Buyers. And you really don't want to be buying into something like this till you get the go-ahead. At this point, you're better off waiting till we get to the other side before you enter any trades. If we're going to get to 100,000, it doesn't really matter, 100,000 and beyond. The thing to watch there is there's a lot of people in the space, a lot of big influencers that are all saying they're going to be sellers before it hits 100,000. So the institutions and the market makers know that. And again, the market is designed as such to extract the most amount of value out of the most amount of people and to frustrate the most amount of people possible. And this setup right here, right now, just seems a little bit too easy to just kind of be here and ride back to all-time highs without any more pullbacks or consolidation or shakeout phases, which everybody is expecting that we should get a little bit of a pullback and another little shakeout. The question is, how far will it pull back? I had Gareth Soloway on the other day, and Gareth, seems to think that we're going to pull all the way back down to possibly 20,000. I initially expected a pull back down to 37 before we started headed off to all-time highs. Back in this consolidation move here, it looked like if we had not bounced, we were definitely going to pull back, test this 37 level where all this resistance was, and then continue on. So that's still a possibility, but it could be we pull back to this 41,000 where we had a lot of support and continue on from there. So if this support level holds, we'll probably continue on from there. If it doesn't, we could break through and test this 37. And then of course, your last line of defense is 30. This line was held very well. And there's a lot of evidence to back up that we probably will not break that unless there's a real serious issue in the global economy, markets as a whole. If we get a big market market sell-off, then all bets are off. And as you saw a year and a half ago, March of 2020, when Bitcoin dropped all the way down to 3,800, it defied all the rules. It went down and broke previous all-time highs before that. So, that is a possibility. And then, of course, continuing on from here is a possibility as well. As you can see, these are big pumps right here. This is not retail doing this. These are very intentional pumps by large holders. So the question is, how high do they want to pump it? And if they're trying to pump up so they can exit, they're going to be very careful about it because they don't want to scare the market and let it drop too far too fast, because then they can't exit up here. So the good news is they're going to keep it propped up as long as they can and as high as they can so they can exit their positions. The key is you want to be in on that trade. You don't want to be at the top of that trade. So what you don't want to be doing is chasing, and we'll jump down on these hourlies. You don't want to be chasing these moves and buying in up here at the peak of these moves. You want to get down in the lows like we talked about last week. You want to be buying on these pullbacks. So let's go back to the hourly where this all started right here and see how this price action looks a lot like the daily that we just looked at. So you want to buy down here where everybody's kind of freaking out and thinking all bets are off and we're going back to the lows again. Then we had the bounce and we dropped back down again right here where everybody thought it was going to be going down again. So these are the areas where you want to enter. You want to enter on these big pullbacks, not these little bitty pullbacks that we're seeing here of a couple $1,000s, but the big ones where we're pulling back 5,000, $10,000 or more. Right now we've had 56, we pulled back down to about 54. That's only a couple thousand. You don't want to buy in on that pullback necessarily. You want to buy in on the big pullbacks where it pulls back $10,000. So if Bitcoin gets back down to 45, 40, that's where you want to be buying in. And this weekend I wouldn't do anything. Weekends can be very tricky. It can go either way. It can dump really hard. It can pump really hard. You just never know what weekends are going to do. So you have to be cautious and be careful. Ethereum is next up, usually after Bitcoin. A lot of the capital, a lot of liquidity is being pulled out of the altcoin markets, going into Bitcoin right now. And then eventually as Bitcoin liquidates, that money will flow back into Ethereum. Large cap alts, Cardano had a little bit, not Cardano, but Matic had a little bit of a run today, but it's already pulled back. A couple of the other coins have had little pumps today, and they're pulling back. So the weekend setup is in play. And at some point when Bitcoin is finished, the altcoins are going to really rip. Bitcoin might go up 2 or 3 times, maybe double from here, maybe triple, go up to 150,000. But these altcoins are going to 5, 10, some of them 20x. So that's where the real gains can be had. And that's what's going on. A lot of people are rolling liquidity from the altcoins as those have been pumping back into Bitcoin, pump Bitcoin up, exit it, roll it back into altcoins. So that's kind of the cycle of the market. That's kind of what's been going on. And remember, on these trades, Bitcoin, Ethereum, altcoins, whatever it is, you don't want to be buying in on these pumps at the top, trying to catch these pumps. When you see these little pumps going on, let's find one right now that can kind of trick people, like right here where Matic was pumping this morning. So usually what happens is you'll get caught in behind this thing and you're going to want to jump in right here looking for continuation, then it reverses on you. You want to be in at the bottom here. You want to be in down here at these dumps where everybody thinks the price is going to go back. And then you want to look at, well, what's my downside? So if you're looking at Matic right here at $1.20 and you feel like, man, this thing's going to continue to go, well, how far is it going to go? You have to look at where it just came from, right down to about $1. So that's $1.20. So that's a 20% pullback versus up here at $1.40. Well, now you got a 40% pullback. So when this thing's ripping here, so you want to wait for this to pull back, and maybe it pulls back to this consolidation stage at $1.20, where your downside's 20%, but your upside, now is another 20%. So that's kind of a 50-50 play there. And if you get caught down here, then you just kind of wait. It'll come back, and they're bouncing. But then you also have to keep in mind ultimately where it came from. July lows, it came from 60 cents. So even at its low here after this pullback, it's double where it was from here. So you have to expect it could pull all the way back to these July lows. So when you're looking at these coins, go back, look at where they are now, where they were at the recent dump, and where they came from in the July low. And that kind of gives you an idea of your most recent downside risk, barring any kind of a market accident, that if your trade goes wrong, goes the opposite way, it could potentially go back down to those levels. So you want to pick the coins that, have good use case, have good momentum, that, are going to be sustainable over the long term, not just the short term, and then have the least amount of downside, where they came from back in this initial sell-off in July, right here when we hit that bottom, July of 2021. That's when we had that second bottom after the initial sell-off, and everything went on this most recent run here. That's kind of what you want to look at there, so that you can hedge against the downside and capture as much of this upside as possible. So be careful this weekend, especially you don't want to chase these little runs and these little pumps that we get into here. As you can see, this little pump of Bitcoin, if you jump in it here, you can get caught up in this trade and it can reverse on you. If once it pumps, the move is kind of made, and you got to wait for that pullback to the previous level before you enter that trade. Now you could have bought in some of these levels along the way and done okay, but these are smaller moves, whereas your big pullback downside is much larger than your potential upside here. So pick your spots, be careful, keep an eye on it, watch out this weekend. We'll see what happens. One final thing on Bitcoin, a lot of people ask about this. Now, again, I'm not a technical analyst. I'm not a chartist. I'm just an investor. And these are the ways I make my trades. I get in at the bottom of these moves and I get out at the tops of these moves. And they're fairly easy to catch if you're not too greedy. I don't try to catch every single bit of the top. I don't try to catch every single bit of the bottom. I try to catch the swing highs and the swing lows somewhere in the range. And if I can get 10, 20%, in a couple of big trades, I'm happy with that. So here's something to look at. A lot of people are following the moon phase, and I've colored these so you can look at the full moons on the bottom, the green pump moons, and then the red moons on the top, the new dump moons. And more specifically, and again, I don't use this, I don't follow this, I'm not into astrology or anything like that, but these things over the last 6 months have been pretty darn effective in calling moves. Now, here's the thing here, just like what we just looked at, what have these corrective dumps on the new moons looked like? We've had a couple of big ones, but for the most part, they've been about 10 to 15%, except for this big drop here back in May when we had the initial sell-off. In general, these dump moons have been around 10 to 20%, somewhere in that range. And you can kind of look at the recent action we've had on these things. So we've got a new moon now that just printed. We had one little red candle. Chances are that's not going to be it. Pretty much every one of these we've had, we've seen, let's measure some of these smaller moves. We've seen at least somewhere in the neighborhood of a 8 to 10% pullback. And we just don't have that right now. So this one here was a little larger. And I'm not saying the move did this, but it just happened around that time frame. That was a 25% pullback right there. Over here, we had this little one here. That was about a, what was that one? That's about a 15% pullback. So anywhere from 10 to 25% is what we've seen on these besides the big May dump. So just be aware of that. That's, it's interesting. It's, again, I don't study astrology. This is not something I would follow or trade necessarily, but I'm testing it and I'm watching it because here was our, full moon pump, and boy, it pumped. Here was your full moon pump here. This little red moon wasn't much, but this move here, it doesn't look like much, but that's still a 10% corrective move right there. If we look at it, about 9%. So that was about a 9% corrective move. That was one of the smaller ones. But we did have this right here. So if you had that with a little pump and that added together, it adds up a little bit more. This was a big one. So anyways, just something for fun, just to kind of keep an eye on. I know a lot of people are getting a kick out of this. And again, this isn't something that I would put money behind necessarily or use, but I sure am checking it, tracking it, and just kind of watching. So this weekend, so we have two things happening. We have a new moon and we have a weekend. So if this all plays out, you should see a, 10, 15, maybe a 20% little correction here over the next few days with this. And then, we'll be moving into a new cycle and we get a new pump moon and maybe we pump back up again. So pretty interesting if that works out. You can just kind of add that to your trading arsenal and just something for fun to kind of keep an eye on. I know a lot of people, look at something like that and they think it's nuts or crazy, but it is what it is, and I know correlation is not causation, does not equal causation. It's just interesting, I think, and kind of fascinating to look at that as we get into the weekend here and the price action. So those are my thoughts for the weekend. Make sure you're not chasing the rips, chasing the pumps and buying in at the top, and check your emotions. Think about how you're feeling when you see some of these coins rip and you're like, man, I knew I should have bought in, and then it rips and you're up at the top saying, should I get in? Should I get in? It could go up, it could go down. And then when you see it at the bottom, check your feelings. If you're feeling like, man, this thing could go to zero or this thing could get cut in half, a lot of times that's the time to buy. But again, check your downside, look at where it came from, most recent pullback at the bottom, and then look where, the last big pullback in July was of this year. And then you'll know what your potential, downside would be if we had a complete retracement. Unlikely, but it is possible. And then you know what your upside is based on where we recently came from. So you can be more calculating in your moves, take the emotion out of it, and start tracking some of these things. So that's the stuff that I'm looking at for the weekend. That's the stuff I've been doing this week. I showed you some of the altcoins I've been kind of playing with, getting in and out of, and catching 10, 20% here and there. And if you do enough of those, you don't really need to do a whole lot of anything else, and you don't have to take a whole lot of risk. You can kind of play with those little swing trades and wait and see how this market works out throughout the rest of the year. I know there's a lot of really good fundamentals that would indicate that we're going to see some all-time highs and that we're headed for a peak cycle by the end of the year. There's other people that say maybe it's going to go into next year. Even Willie Woo came out recently and said that he thinks that this bull market could continue well into 2022, that things are very different this time just because of the level of investors that are in the market now and things like that. So it'll be interesting to see how it all plays out, and just kind of watch those things, look for those swing lows, swing highs. Don't be greedy, try to get all of it. Don't, from the top or the bottom, and just kind of, maybe set up some, free trading accounts or something like that, or just trade on paper and do a little practicing and check yourself and your emotions and how you're feeling when you're seeing the markets pump and when you're seeing them dump with moves that you wanted to make and would have made. And then you can kind of look at it objectively from that standpoint and try to plan some of those moves. So have a great weekend. I'll see you in the next video.